All right. Good morning, everybody. Welcome. This is Don Kaufman. You are watching Ultima Alerts. We're going to get started here momentarily. Please let us know that you hear us all right, that you tuned in, you turned on, huh? All set? Everybody good? Hey, chat in. There's actually two different areas you can chat in. There's a webinar chat. There's a question and answer. In the webinar chat, I watch it in real time. So by all means, chat in where you guys might be joining us from today. It's early here on a Tuesday morning. I am on Pacific time, so please chat in. Let us know that you hear us all right. Excellent. Just making sure we're good. Fantastic. So a couple of names I actually do recognize in here. Good. We're going to start here momentarily. I just like to make sure that everybody's awake. Hey, a couple things right up front. Informally, you can ask questions throughout the course of today's presentation. It is encouraged. So by all means, feel free. If you have questions, comments, or otherwise, chat in today. I will answer them. If I don't answer them in real time, I will get to them towards the end of the presentation. So just wanted to make that very, very clear. Again, throughout the course of today's presentation. The other thing everybody asked me, is this live? It's live. Here, take a look. So live, all right, just dropping some markets in here, making sure that we are ready. Guys, see everything, hear anything? That's usually a good sign. Without, I won't eat up any more of our time here. Let's jump into it today. And again, I'll even turn on the camera. I know it's crazy. Sorry if I'm looking around over here. It's because I have a lot of monitors. I have monitor issues. I just keep buying them. No, I am a multi-monitor system. It's because we're every bit a trading firm now as we are into the education side of things. So there's quite a number of markets I'm watching. Obviously, one of the things that I try to do throughout the course of this presentation, not only to make this dynamic, but, I'm going to trade a little bit in live markets throughout the course of today's presentation. Hope that's okay with everybody. So let's get into it. Excuse me. So welcome again. This is Ultima Alert. My name is Don Kaufman, and you are watching a TheoTrade presentation. What we're going to discuss today is expressly a high probability income generator, and it's not just a trade; it's an entire genre, if you will, of trade. So there's a big, very distinct difference on that particular front. When I say that it's an entire genre of trade, what I'm actually referencing on that particular front is this is something we've used now for years. And well, I'm going to explain it in quite some detail what Ultima happens to be. A risk disclosure, we are no longer in the brokerage side of the business. I say we, many of us here at TheoTrade. And TheoTrade, we launched TheoTrade in 2016, and that was shortly after I exited TD Ameritrade. And I'll tell you a little bit about myself, but many of us here, from myself, which is Don Kaufman, and Brandon Chapman, and Blake Young, and Jeff Bierman, to name a few, we actually are kind of derived from the original thinkorswim group. For those of you that, how many people here actually trade on thinkorswim? Anybody here using thinkorswim still? If you're on the thinkorswim platform, fantastic, we use it. If you're on the TastyTrade platform, fantastic, we use it. Both of those platforms are from the creators of thinkorswim. thinkorswim is a startup firm. Many of us, including myself, kind of come from the thinkorswim background. So with that, a few housekeeping items. Listen, this is a skill set. I'm going to run through a tremendous amount in today's presentation. Look, close Facebook, turn off Skype, chat, whatever else might be. Does anybody use Skype anymore? I do. Does anybody else use Skype? Facebook, does anybody use Facebook anymore? No, good. I should probably change this to something like Reddit, and anyway, kick out the kids, definitely kick out the kids, kick out the grandkids, the dog can stay. Look, I'm going to cover a huge amount in the next probably 90 minutes. So this is important, kind of focus on it. I'm going to go through a lot of examples. This is going to be some very, very fast pace, high pressure learning, I'm going to call it. Look, we are going to provide to you a free auto expected move indicator. This is an indicator that I use not only throughout the course of today's presentation, but I use this particular indicator like incessantly throughout the course of everything that I do. If you've ever tuned in, okay, to any of the videos that we have done here at TheoTrade, we discuss expected move, the auto expected move indicator. Like, well, what is it? You know, I really do. I hate to use screenshots. You know, one of the cool things is markets are open right now. Let's actually take you to a market. Let's cruise over to Apple, go to charts. We're going to go over here. There's Quantix, auto expected moves. What auto expected moves is these three lines on the screen. Those lines kind of dictate, it's what the option market depicts risk to be. And there are infinite uses for this tool. I mean, a phenomenal tool. Look, I didn't build the idea of expected move. Expected move has been around since, I've been around, but I did, in fact, have it built into an automated script. And that's one of the things that's kind of so cool about being able to script things into a platform. Anyway, stay with me right till the end of the webcast. It's a $500 value. I'm going to tell you right now, for those of you that have any scripts or have ever written any scripts or understand this, okay, there's other firms that'll charge you $1,000 just for something like that. We give it to you. And the reason we do that is we want people to understand what's actually driving the order flow, driving the marketplace. As I said to each and every one of you, okay, stay with me right to the end of the webcast. I will give you a link to be able to access the script. Look, we are as much, okay, of a trading firm as we are into the education side of things. So with that, this is why you're here today. So you're going to discover a little bit about Ultima trades and why they are so critical in today's marketplace. I don't even want to use the term ideal anymore for the current market environment. What you're about to learn is critical for this market environment, a market environment that almost doesn't make any sense. We go up because you think we should go down. We go down because you think we should go up. Bad news generates a more bullish marketplace. Look, we've got to learn how to function, okay, in a marketplace that's completely chaotic. So we're going to learn a couple of things. Obviously, we're going to learn a symbol that professionals use on a daily basis to be able to create these Ultima trades. We're going to learn how and where to find edge as a retail trader. Edge is a very important concept. What it basically entails is, like, if you went out and you did something time and time again, would that trade generate positive expected returns? And not about you being right or wrong. Just, I was bullish, I was bearish, I was so bullish that I was bearish. My MACD, my Fibonacci, my Bollinger Band. Can you actually generate positive expected returns without per se being right? Obviously, we're going to learn the benefits and reap the benefits of high probability trades and learn how to mitigate, large losses. For those of you that are unfamiliar with the term of hedge is risk mitigation. We're going to discuss hedging extensively. We're also going to find out what products are viable and what makes a recipe for disaster. Okay. One of the things, when I say product, it doesn't matter what you trade. I don't care whether you trade stocks, options, futures, currency, crypto for that matter. Look, in the end, you can buy stuff and you can sell it. And that's one of the things that I expressed to you. But we're going to talk about exactly what works for this particular and unique strategy. The other aspect, okay, it's really, really important that that you guys see this. Is simply this, and again, you'll find this kind of interesting though. But when we talk about the products and viable candidates and so forth, one of the areas that I'm going to get held up the entire time discussing this, okay, is this. People always assume that when you trade, you need a significant amount of capital. People, all of that has changed. Some of the rules have changed in this business, and I'm going to exploit just that idea today. So when you're sitting there and you're thinking to yourself, I can't do what he's talking about. I don't have 100 grand in my account. Okay. Unequivocally, you can. So when I say that, there's an interesting aspect of what we do here, what I wanted to cover is I have opened up specifically, this is just a $5,000 account. That's it. It's a $5,000 account. In my $5,000 account, you're going to be able to see everything that I'm able to do. Okay. By the way, I have $5,000 accounts. I have $250,000 accounts. I have $600,000 accounts in here. And the cool thing is, okay, what we do here at TheoTrade is completely and utterly, this is no holds barred, like no holds barred approach. You get to see everything. Okay. I don't care how many accounts I have, whether I'm up money, whether I'm down money. Look, I'm down $327 today. Do you realize that's $327? And there's an interesting irony because this is almost $1 million of positions. My margin, this is portfolio margin. This is almost $1 million of positions, and massively unchanged in the day. But you're going to get to see everything we do. That's one of the things that I want you guys to understand. That's what we're about. You get to see everything. You don't have to have a huge amount of capital in your account. With as little as even $2,000 in a funded brokerage account, you can do this. So here's a bit about me, how I got involved in this business. Everybody always asks the question, where do you come from? How did you get started? Look, I grew up around trading. I mean, I remember being a kid and people talking about being in the money, out of the money. They're talking about option trades and so forth. So I grew up around traders. I started trading, in the late 90s. A few years after I went to Chicago and started trading, I met a couple of traders that were from the OEX pit. For those of you that know what the OEX, the S&P 100 pit, those traders happened to be, one of them was Tom Sosnoff. And I went to work with Tom officially in 2001. I think I was employee number 13 at thinkorswim. I was on the executive team of thinkorswim when we took the company public in 2007. I was there when TD Ameritrade acquired us in 2009. I went on to sign a five-year lockup clause with TD Ameritrade, and I exited the brokerage side of the business in 2015. Sat and did nothing for the better part of a year. 2016, we launched TheoTrade. So that's a little bit of background on me. A lot of what you learn here today at TheoTrade comes from the background of the brokerage side of the business. Here's one of the aspects of the brokerage side of the business, that nobody really discuss. I love to talk about this, Look, I spent from roughly 2001 to 2015, in the brokerage world, period. And you're like, oh, okay, who cares? I got to see all of your order flow. I know exactly what works and what doesn't. By that, when I say see your order flow, like I didn't go into the account and say like, hey, I'm looking at Mike's account, Hey, I'm looking at Mike's account. That's not the way it worked. We actually studied hundreds of thousands of accounts simultaneously. We knew exactly what trade. Like if you did an iron condor, I could tell you the probability, of iron condors making money in the long duration. Again, trade after trade after trade. And what you're going to learn here at TheoTrade literally comes from having watched billions and others' mistakes, and more appropriately, what works best for you, for retail traders. By the way, if you ever need to get a hold of me after today, just support at theotrade.com. We use a general inbox. Just put my name in the subject and it goes directly to me. So I still do some TV appearances. That's none other than TD Ameritrade TV. I do a standard spot on TD Ameritrade TV at least once a week. This is a CNBC hit that I did. This one's a couple of years ago, but it's definitely one of the more memorable ones because they pitted me against Kevin O'Leary. This is fairly recent. And one of the reasons I bring this little article, I should say, up, this is Investors Business Daily. Investors Business Daily gave us the cover story of the December of 2022, only a couple of months ago. So they gave us the cover story because it was about who profited in 2022. And of course, my quote is, this has actually been the best year I've had since the financial crisis of 2008. By the way, it's a really popular topic on here, but it's the best year I've had since the financial crisis, said Don Kaufman, an active investor, short seller, and chief market strategist for TheoTrade. It's again, volatility is so very good. Look, volatility has arrived. It's not going to abate anytime soon. One of the things, that one of the things that's just absolutely critical in here is that you understand that volatility has arrived? How many people would actually, agree with that and say like, well, no, it's been around for a couple of years, right? But if you understand anything about volatility, what is it? Okay. What's volatility? By the way, these are not rhetorical questions. Jump in here at any point. So volatility has arrived. Okay. And it's not going to abate anytime soon. So obviously we have nobody here wants to give you that. Okay. Nobody here. Somebody said you're breaking up badly. That's only one person. Okay. All right. I get it. Just making sure that that everybody's good. Everybody good to go? Everybody's good to go. Okay. That one person that said the sound was having trouble. Yeah, I thought it was good because usually I can see on my side if there's an issue. Anyway, when we talk about like volatility's arrived, okay, these are just factors right now, like inflation's running hot, Fed pushing rate higher, contracting the balance sheet, strong dollar. And by the way, the dollar is still strong. Okay. I mean, it's still well over 100. Even though you're like, no, it's come down a lot. Yeah, until you look at it like on a 5-year chart, in which case the dollar is still, soaring on a relative basis. One of the things that I try to point out over here is none of these, okay, are going away overnight. We're going to be in the midst of volatility for years. And the other aspect is we're still sitting here waiting for whatever recession is going to come. Okay, which obviously everybody's pricing in the idea of a recession. It's going to be mild, it's soft, it's hard, it's a hard landing, okay, with soft feelings. All right. The bottom line is you're not going anywhere anytime soon. In fact, I'm going to dub this summer the summer of volatility because that's what's coming. Okay. Look, all of this amounts to one thing, just it's game on. Just embrace the chaos. And I like to start with this because you have to embrace the chaos. And the markets, they got real in 2022. Prior to that, and let's bring this up on a chart just briefly. Bring this up on a chart. Let's look at the last, you know what? I'll zoom in to coming out of the financial crisis, much longer term chart. So here, back here is the financial crisis. We dipped down. For the most part, we've been in a Fed-fueled fantasy since roughly 2009. That's when the regulators stepped in, the Fed stepped in. Fed-fueled fantasy, where they really got crazy. Let's get crazy is right here during the COVID times. We've been effectively straight up until 2022. We came down, and I say markets got real. Here's just the bottom line. It doesn't matter what you think. Okay, for the first time since coming out of the financial crisis, the Fed is doing what they're supposed to do, and that they're actually curbing a little bit of the economy because inflation got out of control. That's not going to go away anytime soon. That's why I say it's gotten real. Stock picking and Reddit boards, it's just not going to cut it. It'll be years. Okay. And if there's one thing that I want you to understand, it will be years before it's going to be like easy stock picks. And everybody's like, no, man, I'll just go with the AI companies. It won't make a difference. If the market goes down in any given day, if the market goes down, everything's going with it. And you go, well, but if the market's going down, everything is going with it. No one cares. There's no distinction anymore, okay, between a Microsoft and a Google, and I can go on and on and on. But that's just stock picking is going to be tough. You're going to need a strategy that has to embrace this volatility, has to embrace the chaos. You can't rely exclusively on directional bias, okay? And you got to reduce risk while substantiating monthly returns. And that's exactly what we're going to talk about. We're going to discuss Ultima trades. Look, higher volatility has resulted in significantly more options premium. Okay. Now, how many people here, again, are familiar with volatility? Many of you are. If you look at something called VIX, okay, first and foremost, VIX is what I want to just say is this is my predecessor's volatility indicator, right? Okay. How many people here look at VIX? Anybody? Anybody? I look at VIX. VIX, even at the 17 level where it presently is still high. Yes. Okay, VIX is still relatively high, but forget about VIX for a second. Take a look at skew. Okay, skew is only calculated at end of day, but skew is also inordinately high. Skew, okay, just deals with out of the money options. Okay, options right now, they're juicy, juicy. Okay, and Ultima has nothing to do with ultimate. Ultima is the volatility of the volatility of the volatility. When we say Ultima, it's a tertiary of the Greeks. Okay, people have heard of the Greeks. There's delta, the gamma, theta, vega. I don't want to freak anybody out. Okay, well, from Vega has what they call Vama, and then from Vama, there's actually Ultima. the trade that we're going to embark upon, okay, today, here, now, has to deal with Ultima. And what it basically does is we're going to give you a trade that is designed to sell options premium while reducing risk. Now, we're going to learn to sell options. So many people have heard through the grapevine for years that options, okay, all right, selling options specifically is a great way to make money. How many people have heard that before? You know, in 2021, you could buy options, but then that one faded away. And all of a sudden, people started hearing about selling options again. Selling options has been phenomenal, okay? But how many people have experimented with it? Because what happens to people that experiment with selling options, they make money, get hit by a Mack truck, and you go, I don't like it. I don't like it. Look, today, we are going to explore a little bit about selling options. We're going to separate myth from real risk, fact from fiction. We are going to teach you, okay, to sell options in one of the most effective means, okay? And again, the aspect of it that is so critical, though, is that selling options, okay, you have got to be able to learn, right, to reduce your risk. And that's exactly what we're going to do. And reducing risk can be done in a couple of different means. In fact, today, oh, this is such a good day to talk about this because I'm going to show you how to reduce risk today. I'm working orders here. They're free hedges, free hedges. This is actually going to work out wonderfully for today's session because I'm in the midst of filling some of my hedges. So with that, sit back, relax, okay? Don't panic. You can do this. Maybe you know nothing about options. That's okay for today's session. Again, newsflash. You can sell premium now in small accounts, as small as $2,000, right? We are now running a multitude of different portfolios using small accounts. What I mean by we are running portfolios here at TheoTrade, okay? We are running and executing, okay, trades in the portfolio. As such, you get to see everything that we do, everything from inception to the hedge, okay? We even send out alerts on all of the trades, okay? And we look at returns as a group. So there are presently about 6,000 individuals, okay, following some of the trades that we do here at TheoTrade. Now we do small portfolios and large portfolios, but we let everybody know that right up front. Everything that I do today as well will absolutely pertain to retirement accounts. So for those of you, if you say to me, I can't do that in my IRA, okay, I can't. I don't want to hear that you can't. You can, and you will, because you can do anything you want now inside of an IRA. Not every brokerage firm agrees with that, but the truth be told, you can do anything you want inside of your different accounts. So for those of you that are brand new here, look, for starters, grasp some of the big concepts, right? Let's dive right into this. Don't panic. Again, you guys can do this, especially if you're brand new. If you're new and know nothing about the options marketplace, you're in the right place. If you're experienced, okay, you know a lot about it, okay? Anyway, I'm just looking over this really quick. But if you're experienced, you know a lot about this, okay? I think you're actually going to get a huge amount because we're going to have some complexity mixed in today, okay? And some, you know, real basic mixed in today. So let's dive right into it. Look, there's a lot of facets of selling premium. Selling premium means selling options. Anytime I say selling premium, it means selling options, okay? In this business, in business in general, right? In trading, you can really only do two things. What can you do in trading, right? You can be both a buyer and a seller. Now in options, what's cool about options is you can open an option position by being a seller, right? So selling premium could be called credit spreads, short call spreads, short put spreads, bull call spreads, bear call spreads, you know, bull put spreads, bear put spreads. Oh my, delta neutral trading, selling naked, mambo combos, conversions, reversals. Look, all of it is a type of selling options premium. And selling premium, you can be both bullish or bearish. But for today, we're going to generally be market neutral. What does market neutral mean? Okay. Anybody? What's market neutral mean? I'm not going on till I get some answers on here. What does market neutral mean to you? Market neutral. It's relatively, okay, no directional bias. Okay, that's what it is. It's relatively no directional bias. I'm not going to sit here today and talk to you about MACDs and Fibonacci's and Bollinger Bands because I'm very forthright in saying, okay, you guys do realize that on a day-to-day basis, what's really driving the market? CPI numbers, PPI numbers, employment situation. Is your Fibonacci going to see that? And I'm serious about that. I don't mean to, poke fun, but you're in a marketplace right now it's chaotic. Not a moving average, a MACD. They can't see the data that's about to come out. Here, we don't need to. We're just going to be market neutral, right? And I think it's really important to know that. Okay, how our members are doing. So this is in February. 100% agree with Randall. I spent the first 19 years of trading without making any profit, but then last year joined TheoTrade, and I'm finally profitable. Don's Ultima strategy, and that's what we're going to talk about today. Now dipping into intraday trading. Doing very well. I've taken off several trades profitably. Okay, this comes from James back in November. And the reason I brought this up, okay, predominantly following Ultima, okay, and New Catapult, your great teacher, as other TheoTrade instructors, with confidence success. This year, my account is up 30%. And I just wanted to show you, this is in November of last year. And this gentleman's account is up basically 30%, which is phenomenal in a year that the S&Ps were down 20%. Look, to get into the trading side of things, your trading is based on probability. One of the things that I don't want you to misconstrue, okay? Probability and profitability, all right? The two, but one doesn't necessarily lead to the other. So what I'm basically saying is, look, people constantly come here. In fact, somebody literally just came into the chat a minute ago and they said, oh, you're right this often. In terms of the trades that we do, okay? Our track record is phenomenal, and people email us every day about that. When I say the track record is phenomenal, we have about 97% of the trades that we do make money. But time out. I'm the first to tell you this. I do not care that 97% of my trades make money, okay? It's what happens the other 3% of the time, okay? That's the key. The probability, okay, alone does not make you profitable. And again, I'm literally beating up my own idea because, in a lot of the advertisements that we do here, we say, 97% of the trades. That's absolutely unequivocally accurate. But that is not what makes you profitable. We have got to talk about edge because markets are a series of trade-offs. Okay, higher probability can actually lead you to higher risk. You can be right 90+% of the time, but you can still lose money. So where can you find edge? Because what you're here for is not to get, like, look at what I do. And, somebody showing like a boat in the background or whatever. Okay. Okay. I do live on an island most of the year. Today I'm coming to you broadcasting live from Paradise Valley in Arizona, but I live now in the island of St. Croix. There's no boat. I am never going to own a boat there. Yeah, you want a problem? Own a boat. All right. I'm a trader. I got enough problems, enough houses. Anyway, what you're here for is to learn an effective strategy that has definitive edge, and that's exactly what I'm going to cover. So with that being said, I always start with a very simple example and very, very straightforward. Here's a stock, and the stock is trading right at 100. Now, this distribution curve just represents the market. Like markets are a distribution curve, right? Stock can go up, stock can go down. Like think about it. The market can go up here, for instance, we'll say to 110, or the market can go down to 90. And what's the probability of going either way? You go, yeah, about, get up here, and the probability is about the same, right? But let's say if we go all the way to 120, or for instance, down to 80, right? And that's just, how price action moves. One of the issues that I have right now, though, this is stock. I don't really want to own stock. So just say no to stock. Why? Look, there's nothing wrong with owning stock, okay? But right now, because of the chaos, because of the volatility, what actually, people ask, what keeps you up at night? What keeps me up at night is you buy a $100 stock, earnings come out and boom, you're sitting with a $90 stock. A $10 loss per share is significant. Okay, let's just push aside the way. Like I just in this session today, I'm not going to own any stock. All I'm going to do is go out and I'm going to trade some options. In the first example, let's talk about being a buyer. Okay, let's buy a 120 call, and the 120 call is going to be a $1 debit. All right, so this 120 call. Now, some of you have absolutely unequivocally no experience with options, so let's make sure, okay, that we have some, okay, brief feel for it. When I say there's no experience with options, okay, here's the bottom line. A 120 call. What does a 120 call give you the right to do? Now, I'm assuming that there's a few people in here. Am I right in saying this? Is there anyone in here that has never traded an option before? Just Y for yes, N for no. Is anybody here brand new, never traded an option before? A couple of people, cool. All right, so I appreciate that you guys chatted in on that front. So a 120 call would give you the right, okay, not the obligation, but the right to buy the stock at 120. All right, so think about this 120 call. A 120 call. You go, well, where can I buy that? Doesn't matter, don't worry about it. But I just want you to understand what a 120 call is. A 120 call is just the right to buy the stock at 120. Do I have to buy the stock at 120? No, but you have the right to buy the stock at 120. Now, time out. Why would you ever want to buy the stock at 120? Look, if you buy a 120 call, you must think that that stock is going to fly. Like you must think that that stock is going to go to 130. And guess what? That 120 call, I'm going to make that thing good for 3 months. You have the next 90 days to see if the one, that stock that's 100 goes all the way to 130. It's a big move. It's like a 30% move up in the stock, right? It's a really big move. So a 120 call gives you the right, not the obligation, to buy the stock at 120. So if you buy a 120 call, what do? After buying the 120 call, you go, oh, please. Okay. And you have to bow down to the option gods and say, oh, please, oh, please, oh, please. Would the stock please go up? And what's going to happen most of the time? Well, your dollar, you're going to strike out because most of the time the stock's not going to move that far. Stock can stay flat, you lose your buck. Stock goes down, you lose your buck. Stock even goes up, for instance, to 115, you still lose your buck. You're like, I don't like this game. Exactly. All I wanted to show you there is that is the plight, if you will, of the option buyer. You buy that thing for $1, and for like the next 90 days, it's 90 days of you zoomed in. You're like, okay. And before you know it, the option is worth like, 7 cents. And you're like, I'm just done with this business. Okay. We're not going to go out and we're not going to buy an option. For this first example, I want you to understand conceptually where you can get some edge, right? Conceptually. And first we have to teach you what the trade is, and then we'll actually show you how to get edge. Ready? So we're going to go out and we're going to do a trade for the next 3 months. I can't write with this pen today. 3 months. Sometimes I write and I see it show up afterwards. It messes with my head. Okay. And we're going to go out and we're going to sell a 120 call. For that 120 call, we're going to collect exactly $1. And this is what we term a credit. So right down here, okay, is we collect a $1 credit. For what? For selling the 120 call. Everybody good with that? Time out. Sell the 120 call. You go, excuse me, how much margin is that going to hold up? And the answer is a ton. This is a trade that you couldn't do. It's a trade that you couldn't do unless you had, about 150,000 in your account. Okay. I mean, legitimately, you'd have to have about $150,000. So why are you showing me a trade that I can't do? Because I'm going to show you how you can do it. Okay. But before we get there, and again, I know that people go, excuse me, that looks scary. It is scary. Don't worry about all that. I just got to get the concept to you. You're going to sell a 120 call. For those of you that have never traded an option before, how can you sell something you never owned? So you're opening the trade by being a seller. Now, again, people try to make options so difficult. They try to make options so difficult. And I'm going to tell you, a lot of education firms try to make options difficult because they want you to feel like, I don't know what the hell I'm doing. You might not know what the hell you're doing anyway. But options are pretty easy. In the end, in options, you have calls and you have puts. That's it. You have calls and puts. You go, I know, but you can mix them together and make crazy things like iron condors. But in the end, you have calls and puts, and you can do nothing but buy them. Okay, buy them means palms to me I'm a buyer. Sell them is palms towards you. Look, you can buy crap and you can sell crap. Nothing else can be done in this business. Okay, and I've had family in this business since the Chicago Board Options Exchange opened its doors, literally. Okay, I had family on the floor before they traded puts. We outdate puts. So I'm going to go out and I'm going to sell a 120 call. Selling a 120 call gives somebody the right to do what? Take stock from me at 120, you go, but I don't own stock. You're going to go out, you do not own the stock. You do not own the stock. I'm just selling the 120 call. Why am I selling the 120 call? Because I feel special, right? I'm selling the 120 call, which obligates me to give somebody stock at 120, but I don't even own the stock. But let's just look at this from a probability point of view, okay? Let's say that you sold a 120 call and you collect $1. By the way, if you sell something for $1, let me ask you this, what's the most you can possibly make? This is where you're supposed to chime in. What's the most you can possibly make? If you sell something for $1, what's the most you can make? Anybody? Anybody? Huh? Just making sure it's $1. That's it. Nobody's going to come back a week later and go, that was an excellent call you sold me. So, okay, you're going to wait 3 months to make $1. I try to make this example look horrific. I'm good at making the example look horrific, but I just want you to understand the most you can make in here is $1. So I'm going to sell the 120 call, obligates me to give stock at somebody at 120. Let's say the stock stays flat. If the stock stays flat, what happens? I keep the $1. What if the stock goes down? I keep $1. What if the stock goes up? The stock gets crazy, goes to 105. I keep $1. Stock gets crazy, goes to 110. I still keep $1. Stock goes all the way to 120, and I still keep $1. Where do I start to lose money? At 120 plus the $1 I collected. So if this stock goes all the way to what? 130, then I'm in trouble. But I want you to see in all these scenarios, you're like, if the stock stays flat, I make money. If the stock goes down, I make money. Even if the stock goes up, it's very likely that I make money. But the only place that I can take a loss is if the stock gets above 120. And 120 is far away. How far away is it? Okay, it's a 20% rally, but it could happen. It could happen. Nobody gives you free lunch in here. Do we understand? Okay, do we understand the concept so far? Because one of the things I want to drive home to you is this, okay? From a probability point of view, okay, when I say a probability point of view, from a probability point of view, is this a high probability trade? Is it a high probability trade? The answer is absolutely. This trade probably has, okay, greater than a 90% probability of making the $1, okay? That trade has about a 90% probability of making $1. Yes, we're good, okay? All right, because now we're going to move on. Now things are going to get a little bit more serious. Now we're going to cruise over to a platform called thinkorswim. Now I could use thinkorswim, I could use TastyTrade, whatever does it for you. But I'm going to cruise right to the spiders. Everybody familiar with the spiders? The spiders are probably the most prolific, probably the most marquee product in the entire industry. And you go, well, what makes them that way? Well, they trade, today's a slow day, and they've already traded almost 4 million contracts. Nothing even comes close. And I'm serious about that. Nothing comes close. Here's the SPX. The SPX is known as the mother of all products. At least that's what I call it. Okay. You go, what about Apple, man? What about Apple's doing like 400,000? Okay. Microsoft. What about Microsoft, man? Microsoft is 150. Come on, you're not even close. Tesla. Everybody loves Tesla. Okay. Tesla trading anything? Oh, okay. So you're going to learn something really quick. You want a liquid product. You want to know what liquidity is? Look to the spiders. Almost 4 million contracts. Yesterday, the entire market did 35 million contracts. The spiders did over 10 of it. So think about that for a second. Almost 1/3 of all the volume came from one product. There's like 1,000 plus things that you can trade with options, but 1/3 of all the volume came from the spiders. So let's us go in and trade the spiders. Now I'm going to go all the way out here, 122 days. You go, I already don't like this. Why am I using 122-day time window? I'm using a 122-day time window because I know something. Okay, I know that you might not love that particular trade, and I'm going to use it anyway. I'm going to use it anyway because I think it's a wonderful example. Okay, fun for the whole family. Here, I'm going to go right to the 465s. Oh, I like this one. I like it. Okay. So I'm going to go way out and I'm going to sell something in the spiders for $1. I'm even going to write it up here. I'm going to go all the way up to here. Watch. I'm going to say, I'm going to sell, right? I'm going to sell. This is an August 18th, the 18th of August, okay? And this is the 465 call. The C stands for call. And I'm going to collect exactly $1 on it. Yeah, time out. That's it. That's the whole trade. Okay. By the way, could I sell this right now for $1? Anybody? Can I sell it for $1? What do you guys think? Okay, $1, $1, $1. Do you think I could really sell this for $1? All right. These are not rhetorical questions. I'm just making sure everybody's on the same page. It's good coffee. It's good coffee. Could I sell it for $1 today? I don't know. Want to find out? I have another fun one. You want to change this market? The market's 99 at 102. Market's 99 at 102. So what we're going to do is we're going to look at what's termed exchange designation. Exchange designation. I'm going to make this easier. You guys see the market now on every exchange is 99 at 101. Okay. I'm going to come in here and I'm going to work in order. We're going to have some fun with this marketplace. I'm going to work these 465s. Even though the market's 99 at 101, I can definitely get a fill at $1 in here. I'm going to try to fill it at 101. So I'm going to sell one, okay, at 101. Now, don't worry about margin or anything like that because everybody gets all caught up in there. But I'm working it at 101, and I want you to see what it looks like, okay? If I'm working it at 101, look, you can see where I'm at, okay? You can see I'm on the Nasdaq, and I'm working 101 offer. And the higher I climb up on here, you can literally see my trade about to fill. So how will my trade fill? The slightest move up inside of the S&Ps right now, and my trade will fill. But I'm going to let it work out there. So I don't mind trading this because this trade actually fits in the genre of Ultima. This is the kind of thing that I would do. Okay, so here's what we're going to do. I went out 122 days, and now I've sold the August 18th 465 calls for exactly $1. Then what do? I do nothing. And people hate this trade and they go, are you kidding me? I just tuned into a webcast. We're 45 minutes into this webcast and all you've done is sold something for $1 and I got to wait 122 days to be able to make $1. And the answer is, yeah, kind of. That's not actually the key. The key is this. How about I can make about 50% on that option? Okay. See, one of the things I'm trying to point out is I am way out in time here, 122 days. A lot of people right now, they've been doing, selling short duration options. Short duration options, okay, will leave you in absolute ruins. Just the bottom line. Let me just clarify this for you. There's no if and or but about it. If you sell short duration options, okay, you're going to decimate yourself in this business. What I'm doing is I'm selling longer duration options. I'm going to get into those options, okay? I'm going to hold them for a short period of time, get a phenomenal amount of decay. So the argument is this. People think that the option is not going to decay. They think it's not going to decay, okay? But let me tell you something. In my example, you noticed I sold options a few months out in duration. Typically, traders sell short-dated options, but that's why you're tuning into this webcast. What we do here at TheoTrade is what we call criteria. And again, this is theta decay. This is that, decay graph that everybody looks at. What if I told you that is completely inapplicable? It doesn't work. Okay. Why? Because I'm not in that business. I'm actually in the Ultima business. What I'm now going to show you is this. If I could collect 50%, okay, of that dollar, if I can make 50%, doesn't matter that it's $1. It could be $10 because I could do 10 contracts. But if I can make 50% return in 30 days or less, are you in? Okay. Are you in? It'll start to wake you up. Okay. So how can I do it? What I want you to see is this. I'm going to go out and I'm going to sell the option for exactly $1. In fact, here, you want me to let's just do this one. Okay. Let's do it. I can fill it $1.01 if I just work it, but watch, I'm going to fill it exactly at $1. Market's 99 at $1.01. I'm going to bang this one right at $1. I'm going to come right in between. Hold. Okay. So I filled it. And of course they bounced the market on me. All right. So now that I'm filled, and I am filled in here, and I've got a bunch of different positions in here, but now that I'm filled for $1, okay, what happens? What I want to do is close this up. What I want you to see is here's a 465 call, and this 465 call, what's it going to be worth exactly 28 days from now? What's 28 days from now? It's the 94-day expiration. Assume for a second all other factors being held equal. Let's not move the market higher or lower. What I want to show you is that there is edge and phenomenal rates of decay way out in time. And it's not the kind of theta decay that you're thinking. This is what Ultima is, okay? So what I'm gonna do is this is exactly 28 days from now. I'm gonna open up, okay, the 94-day expiration. So what I'm doing is I'm like, hey, I went out and I just sold something that had 122 days. And I want to estimate, based on the 122-day option that I sold, I want to estimate what it's worth 28 days from now. So to do that, I look at the 94-day options. And I come out here and I go, let's look at those 465s. What are they trading for? Survey says about 40 cents. So exactly 28 days from now, I can turn around and buy back those 18th of August 465 calls, and I would pay approximately 42 cents. Okay, what do I make? It's greater than, let's call this 58%. It's over 50% in 28 days for doing what? Absolutely nothing. And I am selling stuff that is way out of the money, way out of the money. We good? Okay, because I wanted to show you, you can make over 50%. And what people are doing right now, they're doing the exact opposite. People are going out like 7 days out, and they'll go and they'll sell stuff, okay, for pennies, 7 days out. But the problem is when you sell really close and there's only 7 days left, what happens is you're selling right on top of the market. This market's at 413. You think it can't get to 421? 421, like, holy crap, that's like right here. Me, I'm selling the 465s. Like, I'm out there. In fact, when was the last time the market even traded 465? You got to open up a 3-year chart. Okay, I'm at 465. The market would have to return to almost all-time highs for me to even be unscathed. Okay, and at 465, I don't even lose money at 465. I don't start losing money to 466. I mean, you could see that coming from 10 miles away. People that sell short-dated options, they're insane. They're absolutely insane. There's no edge in selling short-dated options. The edge is all out here now. Okay, the edge is all out here. There's much more implied volatility. Look at the implied volatility. Short duration options, 7 days out has 13% implied volatility. 122 days out has over 20% implied volatility. I'm selling, okay, almost double the implied volatility. I'm selling the juice. Okay, I like this. Raz actually said, I'm a little confused in this. Because what I'm doing is I'm showing you the 122-day option, and then I'm showing you the 94-day option. Because what's a 122-day option worth 28 days from now? And the answer is it's worth whatever the 94-day option. It's the same thing as if I went in here, Raj, I think it's Raz, okay, want to make sure I get that right. I go to options, theoreticals, and Greeks, and I go to a theoretical pricing calculator. All right, let me reset all this. This is not reset. Okay, look, the option right now is theoretically worth 99 cents. What would the option be worth, for instance, like a month from now? So I can actually open up the calendar and I can fast forward like a full month. Okay, survey says, I go to the 18th, it's worth 46 cents. That's exactly, by the way, moving it forward. So I'm showing you a theoretical world how the option is going to decay, and the answer is decay is phenomenal. Okay, so now what's the key? All right, what's the key to this? We can't just go out and like sell an option for $1 and wait to make 50 cents. The key is this, right? And people will go, what happens if the stock goes up or down? We're going to get there. Promise we're going to get there. If the stock goes up, if the stock goes down, if we move huge, all that's going to be covered in a second. The key though is this, okay? If you can make 50% in a period, all right, of 28 days, that's the focal point. And even if we go up and go up huge, right? We've done nothing but rally lately. You can still make money. In fact, what has the market done lately? Okay, what have you done for me lately? Look, this marketplace has gone straight up. Can I show you guys something interesting? I have been selling calls. The market's gone straight up. See these calls right here? These are calls. These are calls. I'm up 25 and 39% respectively, okay? And I've held these during a rally. And you go, how's that possible? Because as we're going up, where's volatility going? The market goes up, volatility goes where? Down. So it works, okay? It works even in a marketplace that's moving up. But, okay, forgive me, we're not even close to home. Going up or down is easy. What I want to get to at this point is, I don't want you to go out and do one trade and make 50%. The key is this, okay? The key is this. This is a fidget spinner. You guys ever see these? Okay, they're child's toys, unless of course you're in your mid 40s and you like to fidget and you steal toys from your kids. This is a fidget spinner. Imagine, okay, imagine that I could go out and I could sell fidget spinners on Amazon, and I could sell this fidget spinner for exactly $1, but I can buy it, okay, from, for instance, like Alibaba for 50 cents. And what's the key? If I can go out there and I can sell this fidget spinner for $1 in this market right now, and then I can turn around and I can buy boatloads of them. I just gave away the answer. If I can buy boatloads of them for what? For roughly 50 cents, what's the key? And the answer is, do as many of these fidget spinners as you possibly can. You must build your fidget spinner business like no other, okay? What you need to understand about this business is this is not about selling one option, okay? This is not about margin. This is not about any of it. This is about inventory, okay? And inventory management. What I want to do, okay, is I want to get my inventory up and running, and I want to get through as much inventory as humanly possible. Because when people start asking about, well, what happens if we go up? What happens if we go down? I'm going to show you that, okay? I don't want you to go out. Okay, here's the spiders, and the spiders are trading 413. We sold some 465 calls, right? We're going to sell the 470 calls. We're going to sell the 480 calls. We're also going to turn around. We're going to sell the 340 puts, okay? We're going to sell the 330 puts, okay? We're going to sell the 320 puts. And people look at this, they go, that's crazy. By the way, on the puts, you're going to collect $2, $2, $2. These you're going to collect $1, $1, $1. This is inventory. I'm going to collect, I'm going to go out and I'm going to sell inventory. Don't worry about the logistics. And I'm going to say, time out. Do not worry about the logistics. The logistics are easy. When I say the logistics, what expiration cycle? Don't worry about that. How far out? Don't worry about it. Don't worry about the logistics. Right now, even for those of you that are experienced, you got to latch on to big, strong concepts over here. Okay, you got to latch on to the idea of what we're trying to do is I'm trying to put you into a business that, by the way, if I sell a bunch of calls and I sell a bunch of puts, people asked a moment ago, well, what happens if the market goes higher or lower? Well, if the market goes higher, all the puts make money. If the market goes lower, all the calls are going to make money. If the market stagnates, both sides make money. But the market in volatility just kind of ebbs and flows. But it doesn't make a difference because Ultima is still going to kick in. And what Ultima is, it's a decay rate of the volatility, right? And even though, you're like, well, but if we keep going down and down and down, these puts could take a hit. They will, but they're still going to have phenomenal amounts of decay. One of the things I want to do, though, is make you apparent this is an inventory management business. I'm not here, okay, to tell you about anything other than inventory management. Does that sound like reasonable? Okay. And of course, everybody's like, what if we move big? What if we move small? What about margin? I get it. There's a million questions. But again, I want to reiterate what we do here at TheoTrade is, okay, we don't just go out and say like, this is the strategy, all right? We build criteria, specifics, nuts and bolts behind exactly how to do this, okay? Nuts and bolts behind how to do it, why we do it, why this theta decay doesn't necessarily pertain to you. And of course, everybody's going to look at the aforementioned trade. And when they look at this aforementioned trade, right? By the way, I'm going to go 122 days out. I do want to show you the puts as well. Look at the puts. Okay, let's go way out of the money. Look at these puts. They're all trading for $2. Look at that. It's trading for $2. See, I was just talking about the 340s and the 330s and the 320s. They're trading for $2. 330. We're trading 413. Okay, that's insane. We got to go all the way for you to lose money in this trade. You got to get down to 330. Like, think about how far that is. How wild of a move. Can the market move like that? Yes, it can. And we got to talk about that. we're going to talk about like how to reduce risk. Okay. And again, because Peter had asked, what if we go up or down? And going up or down, that's just part of the business. You know, look, business is going to have its ups and downs. And we're going to talk expressly about that. We okay at this point? Now, here's the big question. How can you do this in a small account? This can drive people crazy. So we can talk about how selling options out so far in time, but forget all that. How can you do this in a small account? Right? Does that interest anybody? Maybe? Small account. What's a small account? Look, doing this in the spiders would eat up a lot of capital. How much capital to do it in the spiders? Well, okay. If I did this in the spiders, which you can see that I am actually doing this in the spiders in the QQQ. Here I am in the QQQ. All right. I've sold, this is a 10 lot in the Qs. Okay. Spider trades actually closed in here. Wow. I closed all my spider trades profitably yesterday. But if you want to learn to do this in a small account, well, I'm going to teach you exactly how to do that right now. Okay. They came out with a product. What's a product? Just basically means something you can trade. They came out with a product a few years ago that very few people ever picked up on. The product that came out is actually called the micro S&Ps. The micro S&Ps make it plausible and reasonable for every single one of you to do this, even in an IRA. In fact, I hate thinkorswim for this. I'm going over to Tasty. Tasty is simply better for the micros all around. Okay. So on Tasty Trade, all right, look, I can go out 122 days. Same trade, baby. It's the same thing as the spiders. I'm going to close this up a little bit. So I know it looks different, but you're like, it's the same thing as the spiders. And a moment ago, what was I selling? Okay, let me ask you again. What was I selling a moment ago? I was selling the 465 call and I collected $1. Here, I'm going to sell the 4,650 call. What's it going to be trading for? About $11. It's the same thing. Basically, this is like, $1.10, but I can actually go out and I can sell this. And you go, well, that's kind of cool. How much margin though is this thing going to tie up in here? Let me make sure that I'm in the correct account. By the way, the account that I'm in is a $5,000 account. Okay, are you with me? The account that I'm in is a $5,000 account. The buying power in a $5,000 account is $700. You can do this right now in a $2,000 account. You can have $2,000 in your account. You can actually sell the call and sell it naked. Okay, there's no if and or but about it. Don't tell me you can't do it because the buying power effect is right in front of you. The BP is the buying power effect is $700. In fact, the commissions, everything. I like to show full Monty. Look, when I say that this is a $5,000 account, this is an individual account. It's a regular margin account. Okay, my buying power in here is $5,544. Okay, but I've reduced some of the buying power because I have some trades on. The trade, okay, there's the actual buying power. The buying power is reduced by $703. You know what's crazy about this? I want to show you something even better. Did you know that you could sell a call and have a $700 buying power? But if I sell a call, hold on. If I sell a call and I sell the corresponding put, which is going to be, let's do these 32s, okay? So if I sell both sides of the marketplace, so now I'm selling a call and selling a put. Want to see something crazy? The buying power actually goes down. The buying power now didn't go up. The buying power went down. So now I can sell both a call and a put. Instead of collecting just one side of it, I can sell both sides of it, and it ties up less than $700 in margin. It's a home run. Anybody can do it in $2,000 account. And you go, well, they give me option approval. I can get you option approval in about 1 second. Okay, you get option approval. All right. Here at TheoTrade, we actually work with a lot of the major broker dealers. Why? Because this is where we come from. All right. Thinkorswim and Tasty Trade are the same founders. All right. Onward and upward. We good? Are we good? Because, Peter was asking if we go up, if we go down. I'm going to sell both sides of the marketplace, but I wanted to show everybody how they can do this in a tiny little account. Right. So that was a $5,000 account that can easily handle this. By the way, this could also be in an IRA. There's no, but I have it in an IRA here. This is an IRA. So welcome to my IRA. And you go, can you do this in an IRA? Yes. But there's a big but. In an IRA, it will tie up more margin. So what? It ties up $1,300 in my IRA. Don't tell me you can't do this in an IRA. So now that we learned we can do this in an IRA, we learned that we can do this in a small, like $2,000 account. We learn we can do this in a monstrosity account. What you really need to learn, though, is you're in the fidget spinner business. okay, that you have to actually learn a little bit about inventory. So what happens though in this inventory management, you make money, train wreck. You take a big hit, right? Has anybody ever experienced this before where you make money, take a big hit? Okay. So a lot of people learn a strategy. Okay. Years ago, this was really big. Okay. Yeah. A lot of people learn this. And I want to bring this to fruition because every time I ever do this example, and I do this example a lot because people, you need to understand something about me and trading and so forth. Okay. You're never going to send me, and I say this with all due respect, you're never going to send me an email of something I haven't seen before. Okay. I ran the education side of all of TD Ameritrade and 7 million clients for the better part of 5 years. Before that, I was on the executive team of thinkorswim, and I sat on the risk committee. The risk committee is a group, it's a handful of people at the executive level of thinkorswim, and we get to look at everybody's really, really bad positions. So the express job of the risk committee is to look at the worst positions possible. So you're never gonna shock me. But one of the things I used to see all the time, and I really, okay, get on people about this, but there's a strategy that is touted all the time. It's called the iron condor. And the iron condor goes out there and you sell calls, okay, and you sell puts. And this is exactly like we just did. We sell calls and sell puts, but then it subsequently goes out there and buys calls, okay, and buys puts. People spend hundreds and hundreds of dollars on a class to learn how to do this. And again, this is actually called the iron condor. How many people have ever done an iron condor? How many? Come on, people admitting it's the first step today. You ever done an iron condor? It's like a disappearing cup. That's awesome. Oh, it's gone. It's back. Cool. A lot of people have done iron condors. So if you've done iron condors, this is what happened to you in the iron condor. You went to a place and you took a class on iron condors. And the class, it cost you $500 to do the class, give or take a couple of bucks. And you learned to do an iron condor. And you went out, and the first iron condor you did one contract in a product called the spiders, and you made money, right? Okay. So you did one contract in the spiders in round one, and you made money. Okay. Round two comes up. Instead of doing one contract in the spiders, you did 5 contracts in the spiders and you made money. So in month number 1, you sold this strategy and made money. In month number 2, you did 5 contracts and you made money. Now, at this point, you're thinking to yourself, woo, hot dog. It was totally worth the $500 that I spent on that class because in the last 2 months, I made money. Of course, you made money. It never occurred to you that the iron condor inherently has a 90% probability. This is where I say probability alone doesn't make you money. The month after that, now we're in month number 3, okay, you moved into another product. Now you're doing a 1 lot in the SPX. By the way, SPX, the mother of all products. What is the SPX? It's exactly 10 times the size of the spiders. So you were trading 1 contract, now you're trading the equivalency of 10 contracts. So month number 3 goes by, and you make money. You're like, oh man, I'm going to be the next Buffett. This thing is easy. So you have to realize how this trade works. You're doing a 90% probability and realize that. Now you're doing 10 contracts. On month number 4, you do 10 contracts in the SPX. By the way, the SPX, evil. There's a reason we call it the mother of all products, because the mother of all products gets pissed. They should also call it the widow maker, because the second you step in and do 10 contracts, you have to realize that 10 contracts is the equivalency of 100 contracts in the SPX. 4 months ago, you didn't even know what the hell an iron condor is. Now you're trading the equivalency of 100 lot in it. And on month number 4, you do a 10 lot in there, and what happens? Oh yeah, it's like, we got one. It's like they sound a fire alarm, ring the bell, ding, 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 ding. What does the market do? The market makes a swift and brutal move from presently here to right down here, rips apart the iron condor. You panic, you puke. Not only do you lose on this trade, you lose everything you made on the previous 3 trades, and it takes 50% of your account. Huh? Does that sound reasonable to anybody? Okay, maybe it's not reasonable, is not the right word, but does that sound like the plight of the iron condor trader? How many people have ever been through that before? Anybody? Anybody ever been through that before? Make money, make money, make money, make money. Did you get the license plate on the train that hit me? Trains don't have license plates. Like, that's not funny. No, it really is. This is how everybody that ends up in iron condors ends up in that scenario. Okay, because basically what happens, you trade high probability strategies and you're wrong, you're going to get hammered. It's the 90% probability and the 10% hammer. And all of a sudden, train wreck, losses exceed the gains. I know, it's like I could see your account. I could for 15 years. Okay, and it's just applied to the iron condor. And then after you take the class for $500, you take another class that teaches you to fix it. You have to pay another $500. They go, yeah, that happens sometimes. Sometimes you get run over. Okay, fix is a horrible word. I hate the word fix, because fix, and I'm a cynic on this one, fix basically means you're going to take an amalgamation of crap and just going to throw more money into the amalgamation of crap, right? The very notion of fixing a trade is you're throwing more good money after a very bad trade, right? You're throwing good capital into an already bad trade. You got to learn how to do this right, okay? Because look, if you took a car and drove it off of a cliff and then brought it to a body shop, what would they tell you? They'd be like, it's a nice piece of crap. What do you want me to do with that? You go, I want that car to be perfect, just like I bought it. And they go, then buy a new one. Like, what are you thinking? Okay. Look, again, you got to learn to do this right. So what we're going to do is we're actually going to teach you to build some option premium, right? Remember, the business that you're in, it's not what you think it is. Everybody wants to think that they're a genius in trading because you tune into CNBC, okay? I want to be like Jim Cramer. No one could possibly suck that badly. Actually, that he's sharp. But look, it's TV. It's about being right. It's about being wrong. Trading is not be about like right or wrong. You know, when you work for a derivatives firm, which I have for years, okay, when you're in the market making side of the business, which I did for years, and then went to the brokerage side of the business, and then returned, okay, to both the education, and we're traders now. I mean, TheoTrade is as much a trading entity as it is an education firm. But this is about, this is about inventory management. And one of the things that I implore you to understand, we, here at TheoTrade are going to teach you to build an inventory. When I say inventory, like right now, let's say SPY, let's say SPY is trading at what? 415. SPY is trading at 415. Reasonable? You're going to go out and you're going to sell, like we did earlier, the 465 call, collected dollar. Before you know it, let the market's rallying a little bit. I'm going to sell, for instance, the 470 call, collect $1, right? Maybe we rally even more. I might be selling, like, I don't know, the 475 calls, collect another $1. I'm just saying it's a little bit of inventory. Simultaneously, that means at the same time, be selling some puts. I'm going to go out there and sell, for example, the 340 put, collect $2. It's even more than that. I'm going to sell, for instance, 330 put, collect $2. Even sell, for instance, 320 put, collect $2. And again, I'm just, suffice to say, the credits are not perfect over here. So now that I've sold on both sides of the marketplace, that's my inventory. What's your fear? Now, what's your fear? Let's really bring this right home to fruition. What's your fear over here? SPY's at 415. You do realize that it's only a matter of time before we move up massively or down huge. This trade is unsustainable. Now, I've been doing this now since 1998. But as I said, sorry, I'm standing up over here. I have a sit-stand desk, standing up. We're getting serious now. I've been doing this since the late 90s, but I grew up around trade. And when I say I grew up around trading, I literally grew up around market makers. So I've seen everything before. When I say stuff is unsustainable, look, there's always a give and take relationship. See this fidget spinner? You can go out, you can trade one of these and you can make 50%. But all of a sudden you actually build a business, and your business is basically you're running hundreds of fidget spinners, through your business. What do you have to do to get into business? You got to get a business license. You're probably going to have to buy some type of insurance. You're going to have to hire a couple of employees, yada, yada, yada. Has anybody here had their own business and had to deal with employees? It's horrible. Before you know it, you got like half the crew from thinkorswim working for you. That's what we have here at TheoTrade. By the way, everybody that works here at TheoTrade, I mean, pretty much everybody that works here, maybe there's 2 people that I don't know for 15 to 20 years. Okay. I mean, literally, we know everybody here. The minimum time that I know anybody here is probably about 5 to 7 years. But most of the people working here that I've worked with back in the thinkorswim days, we go back like 15, 20 years. This is again, it's a very tight knit group. And you need people like that, especially when you're trading as an entity. So I go out here and I build this business of fidget spinners, and you have to buy insurance and all this. This is no different. There needs to be some type of risk management in here, and I don't have it. Okay. Enter the hedges. It is the most critical portion of this. You cannot survive just selling inventory naked, because sooner or later the market's going to crash. It's going to crash. And you go, well, it's only going to happen once every 10 years. Who cares? It's going to crash. And when it does crash, you're going to wake up and you're going to be in ruins. Absolute ruins. You can't have that happen to you. Enter the what? Okay. Enter the hedges. There are 3, okay, predominant hedges that I use. The first one up here is going to be called a risk twist spread. The second one over here is called a VIX vol spread. And the third one is known as a gamma iron. So I know it's a little hard to read, but I'm going to explain this. There are hedges. What are hedges? Hedges are a sacrificial lamb. Okay. Every few weeks or every few months, you have to go out and you have to actually purchase a hedge. What's the hedge going to cost you? Negligible amounts. In fact, you're going to see a hedge today. Now, I'm actually going to show you the full hedge, everything I've done, because I placed one today, because today couldn't have been a better day to place the hedge. Okay. So what is a hedge? When I say it's a sacrificial lamb, okay, it's like an insurance policy. It's a very inexpensive insurance policy. Look, here's the bottom line about being in business. I don't care whether you're in the options business, whatever, okay, without having some risk reduction strategy, like some type of risk mitigation, okay, you're not going to survive in business. Like there's got to be a fallback plan, because if you think that the spiders are just going to sit there at 415, I got another thing coming to you, because those things, they're going to get really, I'm going to say this as eloquently as I can, that market sooner or later is going to get pissed off. And when it does, and you're on the wrong side of it without hedges, you're not going to survive. Okay. One of the hedges that we use often is called a risk twist. What a risk twist is, okay, it basically takes advantage if the market makes a brief and brutal move to the downside, the risk twist explodes in value. A little harder to explain. I'm going to explain to you what a VIX vol spread is. Here, right here, okay, we are going to intertwine what is termed a VIX vol, okay, spread. For those of you that know what the VIX is the S&P 500 volatility index. Let me just ask this very simplistic question. When the market goes down hard, really hard enough to get to 340, think about it. We're at 415. The market goes to 340. All hell is breaking loose. When the market goes down, where's the VIX go? Okay. Where does the VIX go? When the market goes down, the VIX goes where? Boom, up. It explodes up. Okay. So let's assume this. Let's say that you were here at 415. You put on a VIX volatility spread. The market, okay, comes tearing down. I mean, all around you. The market just, it comes tearing down. Guess what? This VIX volatility spread ignites. It ignites, and even a very, very small trade opens up, like literally like parachute, and it actually reduces risk, okay, of all of this put inventory. As long as you're sized right, it's going to reduce risk of all that inventory. And you go, holy crap, that's actually a great point. By the way, what's that VIX vol spread going to cost you? Here, you want to see exactly what it's going to cost me? I know that's hard to see this, but bear with me. Under my activity here, see if I can actually find it. Here it is. I just placed a 10 lot of VIX volatility spread for a 7-cent credit. Okay. I'll even come in here and I'll create similar order. I'll let you see the order. Okay. This is a 10 lot here. So this is a 10 lot, and this has $6,000 of risk reduction on it, just that little 10 lot. And I'm putting it on for a credit, not a debit, a credit. Okay. This is the kind of trade that you need to learn. The VIX volatility spread is going to reduce risk to the downside. And you go, well, what happens if we explode higher? We explode higher. We actually use a trade called a gamma iron that if the market goes up, it has to actually pass through your other strategy before it can actually hit any of your short inventory. Now, again, there's a cost associated with it, but it's a cost that you can't circumnavigate. It's a cost of doing business. You always hear that like, oh, it's a cost of doing business. It's a negligible cost, a very negligible cost, but at the same time, it's an absolute unequivocal necessity, okay, in this business. And I like to show, hey, look, I just traded it today, and I traded that same strategy in multiple accounts. Here's another version of it. This is a VIX volatility spread. I'll create a duplicate order because what are the hedges going to cost? How about if the hedge was done for credit? The hedge literally done for credit. What did I fill? 3 of them today? Am I still working in here? I'm working a couple more in here. So I'm going to cancel, replace this one, work it for a 5-cent credit. Okay, work it. So I'm now working that trade for a 5-cent credit. But again, I wanted you to see exactly what the trade amounts to. It's a hedge. Okay, it's one of the evil, if you will, necessities of being in this. But if you're going to sell options premium, and again, you look at all of this, and you're like, oh, that's kind of wild. In the end, all I'm trying to do is sell some out of the money crap. That's it. I'm selling some crap. The hedge is just this, if you drive a car, got to have insurance in the car. That's it. Okay. And you go, well, what's that insurance going to cost? Okay. Well, it depends on what kind of a driver you are. But the reality is, okay, this insurance, there's different ways to do it in the marketplace, depending upon what the market is doing. And again, it's pretty critical. Look, this is why you want to learn this. Okay. You want to sell premium can now be sold in small accounts. So we've showed you how to do this in small accounts. Produces positive theta decay, enhances existing positions, provides a positive, probability of success, a really high probability of success. You're never buying or selling the stock. You could be wrong on market direction and still produce profitable trades. And I say this in the most eloquent way possible, but like you need this in your life. You need it in your life because, if you still want to be a stock picker, I'm cool with that. Like you want to go out and find like the next Microsoft, you want to find the next Tesla, you can do that. But to generate monthly returns, that's what this is about. Okay. You're going to need to execute something like premium selling, because the one thing that I can't tell you is when we're coming out of this volatility. There's a lot I can tell you about the marketplace, but I'm going to tell you one thing, and here's the truth. You're not coming out of volatility for a significant period of time. Forget about the Fed cutting rates. It's not going to make a difference. You realize as soon as the Fed starts to cut rates, okay, that basically means they're cutting rates because the economy has gone into the absolute crapper. Nobody seems to sit back and think that. Why is the market rallying right now? Market's rallying because there's an incredible, okay, bearish position that is being covered little bit by little bit. We're actually rallying because there are so many people, okay, that are looking at this economy going, this thing's going to get decimated. And that actually causes us to move higher. Again, you need this in your life. Selling premium can potentially bring in consistent returns while minimizing risk. You want to learn to do this the right way. We're going to talk about criteria. Before we discuss criteria, here's a few live trading examples, right? One of the things I want to implore you to do, variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account, okay, and can be done inside of retirement accounts. Now, okay, there is a stark contrast in what we now do here at TheoTrade. Some people have been around here, and there's a couple of people that chatted in a little earlier that are familiar with TheoTrade. Listen to me, we've changed everything. What have we changed? Okay, TheoTrade is no longer just education, okay? We are now, okay, into full-blown trade alerts. What trade alerts are, the following trades that you're going to see, and I'll bring you into these in just a moment. The following trades you're going to see, these are trades, okay, that are not just examples that we've done. These are trades that have been sent to clientele. Every single trade that you're looking at here, okay, have been executed, right? Every single trade, okay, that you're looking at here have been executed and sent via text message to over what? It's about 6,000 people here in the TheoTrade population. That's how many clientele we have. It's about 6,000, okay? Here, again, all I'm going to do is show you about 18 months of portfolio returns. Again, why am I starting all the way back in 2021? I want to give you a bit of the track record. I don't want to just give you a track record of 2021. I'm going to go into 2021, 2022, obviously to present time. Everybody wants to see what the returns are. Look, these are not just examples. These are trade alerts. Opening trade, closing trade. In fact, here, let me show you exactly what you're looking at. This is the opening trade, the closing trade. okay, to open to close. Tesla, okay, the expiration, strike I used, the amount that I opened it for, the amount I closed. And you go, where did this come from? Okay, this is a screenshot. Apologize, I'm looking over my coffee cup over here. It's a screenshot specifically from the account statement or swim. Like for instance, if I pulled up the /ES, okay, and I said, show me all the trades I've done in the ES over the last 360 days. Come on, 360 days. Okay, I trade the ES pretty extensively for this portfolio. I've done 108 fills over 300 days. All I did is look to open, to open, to open, to open, to close, to close, to close, to close. Every one of these trades I took and I copied and pasted into, okay, specifically this slide deck, so you could see a bit of track record. You can then see, of course, the returns on them. So allow me to take you through about 18 months of results. This is a 58% return, just an opening closing. Here's a bond position, 57% return. Here's a bond short put, 53%. Now, I'm already going to stop and say, you may not know bonds. That's okay. Again, don't worry about all the logistics. I call everything logistics, right? Because you got to know what expiration to use. We'll talk about that. What do you think the alerts are? An alert, okay, is actually a text message that goes out. We also use push notifications, and we do that, okay, simply via, your little mobile device. So with that, and I'll show you exactly what the alerts look like here momentarily, because we here at TheoTrade, we have our own mobile application, okay? And the design of the mobile application is so you can receive alerts, all right? And actually watch all of our content online. So 53%, 62%, 53%, 76%, 60%, 50%, okay? 51%, 57%, 49%, 50%, 62%, 53%, 50%, 50%, 64%, 53%. These are all the returns. And here we are only in what? This is only February of 2021, okay? I'll scroll through. Just you guys, look, there's a 19% loss. It happens, okay? As I start to scroll through IWM, QQQ. Now, once you get a little ramped up, and once you start really understanding what it is we're doing, open to close, to open to close, to open to close, then we start to ramp up the product that you trade. You're going to see me switch from IWM and spiders, okay? I'm going to use bonds, and I'll start to trade the ES. The ES is exactly 5 times the size of the SPY. Okay, and right in here, there's the ES short put. These are much more significant trades. Okay, so you're looking at the portfolio. Now, once you understand, okay, how to open and close trades, and you're actually following some of the inventory in here, then we ramp up the strategy a little bit. We do things like Christmas trees. This is a type of a ratio spread. Okay, this is put on for almost a $21 credit, closed for $3 debit. So imagine I'm selling something for 21 bucks. Okay, and turning around then and closing it for a $3 debit. It's pretty phenomenal activity in here. And again, this is a marketplace. This is 2021. The market was bullish. The market had some volatility, but it was bullish. Okay, all of the returns in here, right? We're all the way up to September of 2021. All right around 50% returns. There's another Christmas tree for a 92% return. Now we're rounding the corner in 2022. Obviously last year, this is a huge Christmas tree for almost a $4,000 profit on one unit, right? Okay. And then again, we're rounding the corner here with 50% returns through and through, another Christmas tree spread. All right. Now I stop right there. Time out. That's 18 months basically of results that I showed you. You said, what happened after 18 months? Well, what happened is I got pretty bored of copy and pasting these things. So here, if you want to see the results after that, this is actually the Theta portfolio. Okay, these are trades that have actually been texted out. They're opening trades, and then down on the bottom of the screen, closing trades. You can see everything. These are the portfolios. Okay, and what's cool about the portfolio, you can actually copy. You can literally copy the trade, all right, and paste it. I don't know if I can do this while I'm actually live. I'm going to try. I'm going to try, but you can actually copy, okay, and then paste the trade directly into the trading application A lot of people don't even know that this exists. When I say you can paste the trade in the trading application, okay? There's no order in the clipboard. It's not letting me do it while I'm live. I apologize. Okay, Zoom sometimes messes me up a little bit. But these are all the trades to open to close, but you can actually copy and paste the trades directly from here. Okay, these are trades that have been sent out. You go, how come there's nothing like this month? It's because we're actually still got quite a number of trades open, right? We've got some trades open. We're in great shape. Look, you don't have to have a monstrous inventory. You just have to have trades open, trades closed. Now this, okay, is the larger of the portfolios. There's also what we term, okay, the small portfolio. And you go, well, let me see that one. What the small portfolio, okay, does is it just goes in there. See, TheoTrade, a small portfolio, goes in there and uses the micros. Okay, it's basically the same trade. It just goes using the micros in here. And again, if volatility gets a little low, it's okay. We just sell some calls. Volatility gets a little higher, sell some puts in here, just creating a nice inventory. I'll never use more than what, a few $1,000s in the micro side of things. But these are the portfolios. Again, the biggest difference, and we've made a monumental change here at TheoTrade. Every trade that I've shown here today, I showed you 18 months, and then I just showed you the portfolios, have been displayed live at TheoTrade. The results, okay, we're showing are perfect for part-timers. Selling premium is very hands-off. You can even use what we term GTC orders, which is good till canceled, okay? And every single trade now provides real-time trade alerts, okay? We don't charge more for the trade alerts, meaning that you get to see not only the trades we're doing, we're sending you the trades. I'm executing the trades. I'm actually maintaining, okay, a number of different portfolios, both here on thinkorswim, but predominantly the portfolios I now maintain, okay, are here, okay, in Tasty, okay? In Tasty Trade, you've actually got a multitude of different portfolios. And you can see the micros and the S&Ps, okay, everything. And again, this is completely no holds barred. You get to see exactly what we're doing in real time. You get the trade alerts and you get to execute. Now, what better time? Okay. One of the things that made us change everything here at TheoTrade, okay, we're in the midst of volatility right now. You may not have time to learn, okay, and ramp up a new skill set in the middle of all hell breaking loose in this marketplace. Follow our real-time trade alerts. Selling premium is a wonderful hedge, okay, for recessionary times. Markets could be in bouts of volatility for years to come. And this is just not going to be a stock picker's market anymore. It's going to be a premium seller's market. And I want you guys to understand, we're no longer just saying like, hey, here's a class. I'm going to sell you a class and you're going to go out and you're going to have to learn how to do this. And then you're going to have to do it yourself and build up from there. Changed everything. We provide you a class on how to do this. But today, literally, if I execute a trade today, you'll be able to follow it. Okay, you'll be able to follow it. One of our members are saying, wow, I want to say thank you again for what you taught me over the last 2.5 years. I bought into what you taught me about risk twist spreads, duration positions, started to trade almost a year ago and missed out on the last market move up. But at the moment, my IRA is up 14.8% for the year. Okay, this is recent, very recent. Again, it's about a month ago, but being up almost 15% this year. Okay, this year's been a rough year. Look, characteristics of selling Ultima premium. Okay. You never have to buy or sell the stock. Risk is, limited to precisely your comfort level. You don't use stop orders. You can vary time frame and actually minimize risk. Probability of profitability is high. Most of the time, you're not going to do anything. This is the perfect strategy to enhance a portfolio. You can actually learn these techniques to literally sell against an existing portfolio. It's an excellent tool just for returns in a smaller account. And again, I want to reiterate the point that new products allow for the sale of options in nearly any account size. Look, building a portfolio of options, okay, don't let the options portion of this intimidate you. So it's one of the reasons that we started doing, let alerts do the work for you. The alerts came about because learning this business 2 years ago, very, very doable. It would take you a couple of months to kind of get ramped up, okay? But 2 years ago, one of the stark contrasts is like volatility wasn't as extreme. Now, on a day-to-day basis, you're sitting on pins and needles. You're just waiting for the next CPI report to come out, just, crack the market in half. You're waiting for the next Fed. You got to let the alerts do the work for you. Okay, you can build your knowledge base while letting the alerts do the work for you. Selling premium can be done for minimal credits and minimal risk. Again, but it's not so much like, that huge learning curve anymore. Now we're going to let the alerts do it for you. You can sell a premium, okay, minimize risk. Do not let the options portion of it intimidate you. You need these strategies for the foreseeable market future. And we can show you how to do it in a couple of hours. But again, more importantly, we now give you the real-time alerts. Look, this is what you need to know to successfully sell premium for a living. You got to know the right underlying stocks or indices. Like, this is what the alerts does for you. Okay. Instead of ramping up and learning, like, what stocks do I use? I just told you, use the MES. You could use the ES. Okay. What volatility should I seek out? If you get into really high volatility stuff, there's some of you are like, ooh, I want to trade Tesla. Okay. That volatility is insane. You're going to get ripped apart. Okay, this is about making returns. It's not about being cool. It's about making returns. I don't really care what I trade. I'll trade the S&Ps, the spiders for the rest of my whole life, as long as the volatility is good and I can make money, right? Does that make sense? What expirations do I select? Look, if you look at an option chain, okay, one of the things you've got to determine when you look at an option chain, look how many expirations there are. I use the 122-day expiration. Why not use 135, 122, 104, 94? Which one do I use? Okay, we'll tell you exactly what to use. What should be the delta of the option I sell? I saw several people asking that question. What is the delta of the option you sell? What should I buy against my position? Like, that's the hedge. How many hedges do I buy? Okay, how do I build the position? Whereas, how many hedges do I need for how much inventory do I sell? Like, if I go out and sell a bunch of MES stuff, how do I do that? Not so easy, right? Do I need a large amount of capital in my account to do this? Absolutely not. $2,000, you can do this. What is the right amount of risk for me? Okay, what are the percentage returns supposed to be? About 50%. Okay, how do I protect myself from market crashes? You're going to hedge. You're going to learn things like VIX volatility spreads. Okay, but you don't have time to learn. We just sent a text message earlier today. In fact, I can probably show you to this effect. All right, when I say we sent you a text message earlier today on that particular trade, funny enough, apparently I haven't even read my text message. Okay, this is the text message from earlier today. I love the disappearing phone thing. Okay, there's a text message that came out earlier today on the VIX volatility spread. Look, let me show you exactly what we do here at TheoTrade. We create recipes in trading. A recipe in trading would actually give you details to be able to get into every single step of how to not only enter, manage and exit a trade. And now we're doing real-time alerts when trade opportunities arise. Trading is all about answering what ifs. Okay, what might be a good stock or ETF candidate to sell premium in? What's the correct option and expiration cycle? How much capital do I commit? What options do I buy? What options do I sell? How can I limit my risk? Okay, we have the answer, to those questions and trade alerts. We build recipes with definitive criteria. We literally have checklists. Okay, in the coursework, we have checklists for each strategy and each unique variable you're going to encounter. The way that the checklist is built is much like a pilot when they enter a cockpit. Pilot enters a cockpit, they don't just push up on the throttle and take off. They go through a highly detailed checklist, make sure it's basically going through and saying yes, 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 yes. Everything has to fit the criteria, okay? And then once you actually get that aircraft up in the air, most of the time here, nothing happens. Once in a while, though, things get a little wild. Look, okay? And now we're taking TheoTrade a step beyond. We're taking TheoTrade a step beyond. We're taking that checklist, if you will, and we're making it applicable to Ultima trade alerts. We're taking the checklist and we're actually running the checklist. We're executing the trade and then sending that trade out to over 6,000 clientele. Look, TheoTrade is the answer to your questions. What's the right probability for your trade? How many option contracts do you trade for your account size? When do I close premium sell? What if we sell off big? Do you bail out of a trade? What if we rally massively? Can I fix a losing position? It's about how, when, why. It's about what price. And I'm telling you right now, it's just the beginning of the variables that you're going to face, okay, while selling Ultima options for a living. To give you an idea, when we do a trade, right, there's a couple of trades that I've got inside of this account, right? But again, these 44.25 calls. Let's go look at the 44.25 calls. And again, I just want to show you what this looks like. These are June 16s, okay? June 16s. I'm going to close all this up, okay? And the June 16s, those 44.25 calls, okay? Here they are. And if I were to look at like open interest in here, open interest or how many contracts, okay, are effectively open, you can see some contract size in here. Am I on the right expiration? Okay, I do apologize. I might be in actually the wrong one, okay? What we're actually looking at here is, I was in the wrong one, haha, okay? There's two June 16s. What I'm showing you here, there it is right there. When we do a trade, okay, when we do a trade like this one, over 1,000 contracts are effectively open. There are 6,000 clientele here at TheoTrade. Not everyone follows. This is just the Theo Theta small portfolio. But in this particular small portfolio, just to give you a quick idea, here's the July 21st, 4650 calls. Okay, so I come out here in July, right, 21st, the 4650s. Take a look. There's my position. Look, over 1,000 contracts are open. So clearly, there are thousands of trades every time that we execute. That is literally what these trade alerts are designed to do. I don't want you to think we just send out a text and you can't get filled. Obviously, 1,000 other people got filled on those. And that people, that's the small portfolio. The big portfolio, okay, can be tens of thousands of contracts that are trading over here. Look, you can read about what selling premium is. You could probably Google right now, oh, what's selling premium? Okay, 10,000 pages will come up on selling premium. They're not going to tell you the specifics. They're not going to tell you what underlying, how to circumnavigate some of the margin restrictions, how to actually execute in, how to execute out. Some of you know how to do this already, okay? That's not what you're here for. You're here because you need TheoTrade's alerts. You're here because you need the expertise behind it. At 20 plus years trading experience, access to client order flow for 15 years, we have viewed and studied millions of trading accounts. I specifically ran education for 15 years at both thinkorswim and TD Ameritrade. We have the largest option order flow in the entire industry, okay? This is helped us derive, okay, the alerts, which is the recipe for success. The following strategy and corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning the trade setup, fine-tuning the criteria, and now real-time alerts at the convenience of your mobile device. Okay, this is the Ultima income generator alerts. I happen to be the trader for these two portfolios. What that basically means, okay, when I execute, you get to see the exact trade. It's the Theo Theta small portfolio and the main Theo Theta portfolio. And the Theo Theta small, it's $5,000 plus. You can do this with $2,000 in your account. Suggested you have $5,000 in the account. But you can do it with $2,000 in the account. The bigger Theo Theta portfolio, okay, you want about $50,000 in that account. By the way, if you're like, oh, well, I have 20 grand in my account. So you just follow the Theo Theta small, okay, and do 3 or 4 times, okay, do 3 or 4 times, and that's fine. These portfolios, okay, and access to them is given to you today. The trade alerts for 3 months. This is brand new. It's $297, okay? Now, it also includes, before I go any further, because there's a lot of different services out there, this also includes full access to everything that we do here at TheoTrade. We give you classes here at TheoTrade. We give you coaching sessions here at TheoTrade, okay? We have a full-blown chat room here at TheoTrade. In fact, okay, rather than talk about it, just to show you, this is live right now. You're going to get access to all of this, okay? And when I say this is a chat room, this is a trader live right now, okay? Walking you through different positions, okay, and a variety. Oops, muted. So I can unmute him.
Certainly 261 is the neighbor of the 61%.
Okay. Anyway, as I go through here, you get access to everything that we do here at TheoTrade, including, of course, all the different portfolios, Theo Theta small, Theo Theta, there's weekly videos, but I also want you to see archives, different classes that we offer, okay? But we've gone so much beyond now the classes because everybody was like, come on, man, your classes they're second to none. There's no one that can catch us in all the different classes that we put together, right? In terms of education. There's also no one can touch us in terms of the trade alerts. So we basically put our money where our mouth is and said, yeah, you're right. We execute the trades anyway, okay? Now you get to see not only the classes, but you also get to see the trade execution. And it's one of the biggest contrasts we made. If you go to TheoTrade theotrade.com/skew. Again, theotrade.com/skew. Okay. I want to go through something for a moment. All you have to do is click add to cart. When you click add to cart, again, it's theotrade.com/skew. Let me actually pull up. I have the web address right here. Theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W. Theotrade.com/skew. Okay. When you're putting in your information, right? Make sure you include a phone number. That way you can receive text messages. The way you can do 297, okay, 2 payments, 3 payments, break it down any way you want. The other aspect in here, and I'm going to cover this momentarily, okay? This is the incentive for today. Those that enroll today, and I mean today, now, the first 30 people to enroll, okay, get a full 90-day money-back guarantee. It's only a 90-day subscription. This is not an introductory price. It's 297 bucks. Okay, that's always been the price. TheoTrade, it's 297 bucks. But now you actually get the trade alerts with it. Now you're actually getting that blasted out. And we used to kind of separate that out. We could easily charge $1,000 for 3 months. Okay, easily to do this. We don't. We started incorporating it with it. The trade alerts are now part of TheoTrade. It's 3 months. There's a full money back guarantee. By the way, there's no stipulations to the money back guarantee. I'll go through that in just a moment, but I want you to see what we now offer. In addition to everything else that we do, you're getting Ultima income generator alerts. Those alerts can come to the convenience of your phone. The alerts, of course, can also come, okay, by other means, push notification as well. Look, the Ultima income generator alerts. I'm the trading instructor for this. It's a positive theta portfolio. It's a no hold bars approach, meaning that you get to see opening trades, closing trades, all hedging positions. You get to see me discuss positions like I've never done before. There's even, okay, weekly updates we do on this. But before I get into any more detail about the portfolio, there's a 90-day money back guarantee, okay? And I want to go over this because this is, again, it's, huge because we've done 90-day money back guarantees in the past, but this is actually with real-time trade alerts. If you're not happy for any reason, okay, you don't have to, do a little dance, call us, whatever. There's no stipulations. Just email us. It's support@theotrade.com. One thing I implore everybody to understand here, okay? This is not an introductory price. It's 297 bucks, okay? $297 for how long? Okay, for basically 3 months. At any time in the 3 months, okay, if you want, we'll just give you your money back. The one thing that I always tell people about TheoTrade, we want people, okay, that want to be here. We want people that really want to learn this business. We want people that want to execute trades. If you don't want to be here, it's $297. We are more than happy to give people their money back. One of the questions that constantly comes up here is people say, what happens after the 3 months? Are you going to hit me with huge fees? After 3 months, okay, this is not a membership. After 3 months, if you want to do it again, it's $297. And you go, what happens after that? It's $297. We ask you though, okay, we never charge your card. Again, we don't do what they call reoccurring, charges or reoccurring monthly. This is not like a gym membership where you're like, you have to give blood to be able to get out of it. We're not into that. By the way, I hate that stuff. I hate it myself. I hope you don't like it because it drives me crazy. And we give the money back, the 90-day money back guarantee. I don't ever want anybody to feel that they didn't get, okay, everything they paid for and then some. We execute trades right along with you, okay, for better, for worse, for profit, for loss. We've had some really strong years, especially since the volatility kicked in, which I'm going to show you here momentarily. But there's a 90-day money back guarantee on it. It's not for everybody. Okay, you do have to follow some trades, and that's okay. So that Ultima alert comes right to the convenience of your phone. All right, this is what the portfolio looks like. And to some people that are brand new, you're like, I don't even understand what it says in there. You will understand. Okay, and of course, everybody wants to know, how did you do last year? In 2022, the Ultima portfolio on a $50,000 account returned 56.6%. It's $28,314.75. Now, I never, ever used the full 50K. I never used more than $17,000 in margin throughout the course of last year in the Ultima portfolio. And I don't mind you know, this year has started off slowly. Hopefully you hit a stride in volatility. Okay. This year, the portfolios, they're chugging along. We're nowhere near like a 50% return, but this year the portfolio's kind of stuttering along. We're absolutely unequivocally positive on the year in TheoTheta and TheoTheta small portfolio. Okay. This is the weekly Ultima Alerts video update. Each Friday, I do a 12-minute video to update you about everything we've done that week, all the different trades, why we did the trade, what my thinking was in it, because again, along with the idea that this is just alerts and it's supposed to produce returns, okay, produce a video so that you can understand exactly what we're doing. Give me 12 minutes on a Friday and I'll give you everything that I did throughout the course of the week. Sometimes there's nothing, okay? Other times, yeah, there's a couple of trades. Don't expect a huge amount of trades. You don't need a lot of trades, okay? The inventory doesn't have to be massive initially. All we have to do is go out there and just hit singles and doubles and be very consistent. The alerts look something like this. Sell the 3,400 put, okay? Sell the 4,500 call, 24 credit, okay? Then closing strategy. To open to close, like closing for 50% profit. This is exactly leaving hedges on for now. All right, as I said, it says the hedges in here too. Closing for 50% profit. This is an inflection point trade. Inflection point is a variation. Part one, okay, buy 2 of the puts, right? Work orders aggressively. Part 2, get rid of the hedge, work orders aggressively for a fill. Here's some more, okay? Again, when it says work orders aggressively, that often means that we're rather volatile at that point. Okay, here's a 2 lot that I'm selling, 3,400 puts against the 44.25 calls. Okay, you can see those 44.25s. We still have those on. Look what our members are saying. Pat came in and said, thank you for your reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one which I can see a pathway to retirement. Okay, my closed year-to-date profit with Ultima trades has paid for my yearly TheoTrade subscription. Okay, people always ask that. We do offer a yearly, but this is, you know, really recent. That comes from John. This comes from Jeffrey. I want to thank you for all the different point of views. This year, I did more of what works and less of what didn't. Thanks to your selling premium and IPS hedges, took 12K to over 32,000 in 18 months, and I've been doing your method. Thanks again so much, and look forward to your new ideas in the coming year. Okay, so this is, by the way, this is actually towards the end of the year. I know it says yesterday. This is actually towards the end of the year. Get to TheoTrade now. We're going to work with you directly. By the way, I apologize for this. We are actually making this with a lot of people on 30 spots on the riskless deals. Okay, 30 spots today. It's a matter of trade size. It's unlimited email mentoring as well. So one of the things that I didn't yet tell you is this. Okay, we don't just go out there and fire trades. At any point, email us. You can email us. It's all included in TheoTrade. Email us. You get the classes, the coaching sessions. Look, there's nothing in TheoTrade that we're not going to give you access to. I stress this to you. You have access to every class we've done since 2016, like VIX volatility spreads, okay? Trading VIX options. I just did this today. I literally did one of these trades today, okay? Why that delta and so forth, and how to actually build trades. When I say there's nothing, we give you access to the chat room. We give you access to all of our portfolios, okay? It's, again, no holds barred approach. You get to see every opening and closing trades. And a $297 riskless offer has never been available before, okay? With the alerts and a no stipulations money back guarantee. As I said, the money back guarantee is important because I want to make sure that if you're going to do this, that you want to be here. And I think it makes it easier for people, well, for the first 30 people here today to enroll, makes it easier for people to hop in here and feel, okay, it's a riskless deal. Get ready for text messages. When you get text messages, they'll come from the following numbers. Just wanted everybody to be aware of that. Go to theotrade.com/skew. Again, it's S as in Sam, K as in kick, E as in echo, W. To reiterate, theotrade.com. When you're filling this out, please, again, put in your phone number. Put in your phone number, first name, last name, obviously email address in here, and however you want to pay it. By the way, even if you do 3 payments of $100, you still have a money back guarantee. I get that question all the time. And I want to reiterate, this is not a membership. We will not bill you again, okay, without your express consent. So complete purchases over here. There's PayPal in here. All of this is available to you. But realize the one stipulation, it's the first 30 people. The first 30 people to enroll today on the money back guarantee. Just click add to cart. Again, TheoTrade.com/SKU. I'm going to go ahead and answer a couple of questions in here. By the way, this has to do with support and email support. We support you. Most emails are returned within a few minutes. If you have trade related questions, sometimes give us a few hours to actually respond to you. Not a problem. A couple of questions answered. I also have some specific questions that have come up throughout the course of the chat, and I'm going to go ahead and take care of that. By the way, somebody was actually asking about Canada. Yeah, there's brokerage firms that we deal with in Canada as well. Absolutely. Some of the general questions that people ask, and again, the web address is right down here, TheoTrade.com/SKU. That's the web address to also be able to go grab the thinkorswim auto expected move indicator. What do you need to really get started here? A laptop, internet connection. Frankly, I don't think you even need a laptop anymore. Okay, you just need a mobile device. Okay, basically any mobile device that you can go ahead and I say any mobile device. It should probably be a smartphone, but for the most part, any mobile device where you can actually trade off of, you can receive alerts on here. Okay, we both do text messaging and push notification, so we've got you covered on there. We have everything else you need to get started. Again, this is not a membership. We're going to auto renew. We don't do auto renew. We don't do auto bill. Hope that's okay with everybody. Okay. We're now providing the TheoTheta weekly updates just to show you where those are found. The TheoTheta weekly updates. These are weekly videos to where you can actually go in under the portfolios. You can say, show me everything you've done. And here are the videos. Like the last video obviously was April 14th. That was the Friday video. You just click on it and the video is usually about 12 minutes. This one's about 9 minutes. And we update you on every move that we've actually made. Okay, in every portfolio in the 9 minutes. So this is TheoTheta and TheoTheta small portfolios. Okay, all of that is available to you. All right, next one on here. We give you access, okay, to TheoTrade mobile. You can receive push notifications on our mobile device. So if you're over, for instance, in Australia where you can't get text alerts, you get push notification. Number 5, add your cell phone number when enrolling. Receive text messages for your alerts. Whoops. Okay. Number 6, you can email us anytime, receive a response within 24 hours, including trade related questions. One thing we also implore you to understand, you can ask trade related questions here. You don't have to come to the, like, hey, my dog's sister's roommate has a question about trading. We're like, hey, suppose I was doing this, just come right out with it. People actually copy and paste some of their statements in there. They copy and paste some of the trades. Look, if you need help, we're there to help you. All right. It's not bad for $297 just to be able to have somebody to bounce some questions off of is worth it. But on top of it, you get access to TheoTrade, all the trading alerts. People, like, there's nothing else out there even comparable. You can go out and spend $20,000 on stock market education over the next year. It'll pale in comparison to what we do here at TheoTrade. And I say that like bar none, there's nothing else like this. Check it out. That's why we give you the 90-day money back guarantee, because if you've ever been to any other like market education, okay, enroll right now, go hop in the chat room. You're going to see stuff that your jaw is going to drop because you're like, how do these guys do this? Okay, for so little. It's $297 for 3 months. We do it because we have numbers. We have 6,000 current clientele. We also have, and this is very, very unique. Okay, I like to show this. We also have here at TheoTrade, okay, all of the major broker dealers that we work with. We work with Tasty Trade, Magnify Tradier, E-Trade. Okay, we're actually putting together another deal with Charles Schwab. All the other brokerage firms, okay, that are in the business. We're even looking at like Robinhood and so forth. Why do they all work with us? Because our clients are successful. They work with us. You'll never see that at any other education firm out here, bar none. Okay, they turn to us because we have 6,000 clientele that stay in the business, and the only people that stay in the business are those that are successful. Again, number 7, variations of all the trades are available inside of an IRA or retirement account. You can do this with as little as $2,000 in the account. Okay, we at TheoTrade can help you get approved for options trading at several major broker dealers. So by all means, if you've got, a broker dealer you're working with right now, fantastic. If not, okay. If not, we can help you. Making sure we're good here. So again, we can help you get approved at several major broker dealers. Today, we actually bounced this to 30. There are 30 riskless trade spots presently available. We've bumped it up a little bit because we've got a pretty good number of people on here. Look, get results, take action, enroll for TheoTrade now. There's no risk to you. So again, I can see a couple people enrolling right now. Answer a few more questions in here and kind of wrap things up. Somebody said, Don, would you do those MES trades you showed now with the VIX at 17? Okay. Yeah, what happens if the volatility goes back up with 122 days to expiration? So Lou, the answer to that is, yeah, no, there's plenty of trades that I would do right this moment with the lower volatility. Like that's not going to be a huge issue. In fact, you know what the funny thing is? I actually enjoy showing this to you. Like people think that VIX at 17 is low, and it is low relative to where we've been, for instance, the last year. But you look over like the last 3 years, still kind of middle of the road. But if you look at like the max VIX, this is actually relatively high comparison to the last couple of years. Nevertheless, when the VIX actually gets low, if you're more comfortable just selling calls, that's fine. But then if you're concerned about that and you're like, oh, I'm not going to sell like, enough calls, make enough premium, there's no problem in also selling puts, even in the lower volatility. Why? Because I've got the hedges in here. I've got hedges right here in VIX. And even if I sell puts, if the VIX does spike, okay, so be it. I'm actually going to make money off VIX. And I put some size on inside of some of these VIX positions in here. Okay. All right. With that, I just wanted to answer that one over here. By the way, a couple of names are popping in here for those of you that are enrolling. Peter S. from Georgia, Johan C. from California, Michael M. from Georgia, Harvey C. from California, Kalid K. from Canada, all the way from Canada. Again, if you want, you can email us separately and we can give you the brokerage firms that are effective there. Tasty Trade looks like approval is coming in Canada, probably early 24. So you're going to have another option up in Canada in early 2024, and that's going to be the best option. But yeah, that's important. Those are, by the way, the names that I just read off are individuals that have now enrolled. I'm just confirming that you've enrolled. As I said to you, there are 30 riskless spots available. It takes me 5 to 7 minutes before I actually see you enroll. So I apologize if I'm not like reading off every name immediately. Susanna V from Massachusetts, Chi Ji from Singapore. Okay. By the way, Singapore, there is still, there's a couple of different brokerage firms that you can actually use in Singapore. There's obviously Tasty Trade. Okay, you can actually open up a Tasty Trade account though from Singapore. You can open up a thinkorswim, which is Charles Schwab account in Singapore. In fact, I happened to open the original thinkorswim office in Singapore. I spent a lot of time eating chili crab in Singapore. Ooh, best ever. Oh my gosh. Okay. Probably some of my favorite food. And I've been all over the world. My favorite food probably like in Singapore. Okay. For those of you from Singapore, I like the sacred fruit. Okay. I like it. So with that, so I ate a lot of durian when I was there. Anyway, onward and upward from there. I want to make sure that I get everybody's questions answered in here. I'm also going to chat in. All right. What happens if the stock goes up or down in the 28-day window? That's one I've covered quite a bit. But so markets are going to ebb and flow higher and lower. And you don't always close exactly in the 28-day window. Interestingly enough, though, we looked at the average hold time. Okay, let me actually pop this back up over here. We looked at the average hold time of a trade. And ironically, it's under that 27-day window, which we thought was fairly interesting. Again, the web address over here is theotrade.com/skew. Okay. And there's only a handful of the riskless spots left. I'm just saying that because I'm watching a couple more names kind of pop in here as I'm going along over here. And hopefully I've answered most of the questions. What I'm going to do now, okay. Somebody said, what's a good return on a $30,000 account with this program? So I just gave you a return on a $50,000 account. But, when it comes to returns, the best thing I can tell you is the first thing you want to do is beat the S&P 500, because they always say like 90% of fund managers don't even beat the S&P 500. Okay. We've already done that this year. All right. We're still outperforming the S&P 500 this year. Even though the S&Ps are up pretty good, we're still outperforming. But the goal every year, okay, I shoot for 20% plus returns on a yearly basis in some of the portfolios. It varies though, based on the portfolio. But again, 20% plus. The smaller the portfolio though, sometimes the bigger the returns, but they're going to have a bit more risk out there. With that, I'm going to wrap things up. A couple more names are coming through. Richard V from Texas just got your name. And I want to thank each and every one of you as you're enrolling today. Feel free, shoot us an email anytime. It's support@TheoTrade.com. Again, you just go to TheoTrade.com/SKU. You can enroll right now for it. Again, there's 30 riskless spots, of which, okay, we have a limited number left. Marshall C from New Jersey, just seeing your enrollment come through. Joseph K from Pennsylvania. And again, I'm just reading off names to confirm, okay, we see you've enrolled, okay, you receive emails and so forth with the username and password coming in here. Will C from Georgia. Again, we're kind of trickling the names in over here. As I said, it takes about 5 to 7 minutes before I actually see it populated in here. Thanks everybody for tuning in today. I've actually appreciated another one, Stephen W from Washington. So those are individuals that have enrolled, just confirming you guys have enrolled. If you need anything along the way, just hit us an email, support@TheoTrade.com. Myself, Brian Aponte, okay, Matt Williamson, all of us will be answering your emails as pretty much as fast as they come in. Have a wonderful afternoon, everybody. Bye-bye.